up, everybody? It's Omar from the Bullish Bears team. It's June 28th, 2017, 8:21 p.m. in the evening. And this video, I want to talk about my trade, but I also want to talk about the psychology of trading a bit. What I've been dealing with. So, for those of you who know, I opened up my Center Point account almost 2 weeks ago now. And, I've been struggling since I opened the account because it runs off the DAZ trader platform, which is nice. But, I cannot, so when I trade with Thinkorswim, sometimes I can break through the firewall at work, and then I have the nice big screens and the monitors, and I'm accustomed to trading off that. Now with this, there's no opportunity for that. It just doesn't work. So I have to bring my laptop. It's 15.6-inch screen, and I'm basically trading off that now. Honestly, you could do it. It's just an adjustment, and I'm so used to when I make a trade like on Thinkorswim, it's all in one platform. I just click the button and all this. Now what I have to do with Centerpoint with the DAZ platform is I have to I don't know how to explain it, but there's a little screen where you make your trade. I have to pop it out, and then what I do is I have it here so that I can make my trade, and then I have to toggle back and forth. So to see where I'm getting executed at and all that kind of stuff. So it's an adjustment, and I'm not, and I made, I don't know, so far 10, 11 trades with them, and 10 out of the 11 trades that I've made, I was up on every one. And when I try to close my position, I realized my position was getting closed and I wasn't getting filled. The first few trades I made, I tried to make with the mobile app, and it was disconnecting, so I couldn't close, and I was losing. So I was down $1,000. So I'm telling myself until I get my rhythm going, I'm just gonna make one trade a day, one win, and just call it a day. A goal to make $100, and I'm good. Now, with that said, I bring that up because this morning, I had my watch list and I was ready to make my trade. I had my platform open, and I saw AMD. All right, AMD was selling off right at the market open. I mean, it was simple strategy, right? Where I talk about, look, forms the lower high right here. So here's the market opens, it gaps up, forms the lower high right here, 1358, and this candle I should have shorted it, right? Actually no, I didn't catch it there. I'm lying. It was gapping down. I was actually looking at another stock. I was looking at let me pull up. I'll tell you the whole what my thought process was. I was looking at, I think it was it IMGN or was it, no, AUO, I think it was. AUO, I was watching this at the open. You see I caught the range here. Let me remove this real quick. Let me go here. Let me just remove that, hit apply for a second, and hit OK. Okay, good. So it makes it nice and clear. So, the market opens, and I caught this was the low of day, and this was the high of day, right? And I thought AUO was going to pull back today because it was 403 5 days ago, and it got up to 495. It started pulling back. So my expectation was that maybe it was going to have a red day, which it didn't. And I was watching this stock waiting for that crack. So what I was going to do is if it broke below 467, I was going to short it. And you see the range here, the market opens in this 1 minute candle, it finds its low of the day, and then by 9:35 it found its high of the day. So basically the strategy is if it breaks above 475, you long it. If it breaks below 467, you short it. So I was looking for that crack below 467 to take a short on it. And it just wasn't moving the way it was moving slow. There wasn't a lot of volume. And I could have longed it, and it would have been pretty good for me, but I didn't do that. So I was like, so let me look. So I saw AMD, and let me just pull up AMD. And when I caught AMD, I saw AMD right about here, around 1344, right where this is the previous day's close price. So a great trade is to take a short right when it dips below the previous day's close price. But what had me a little scared was that it was the RSI was about to hit below 30, so I thought it may have popped. And what I wanted to do was take a short right here, risking 1340, And you know what? I got spooked. I'll be honest with you, because I haven't been feeling very confident lately. I didn't make the trade, and another thing that made me scared was that the RSI was low, so it was due for a pop. And you know, you see here it had this pop here, but then it continued to sell. So I thought about shorting here and I didn't. Just to tell, goes to tell you guys that, you know, my strategy works. I've made a lot of money short, you know, trading, day trading. But you know, sometimes you get in these ruts, and for me, it's really because I'm just adjusting to a new platform, you know, and working off a little laptop. So, and I'm on sketchy Wi-Fi at work, so I got a lot of things working against me. So, and, you know, and I'm trying to lower my risk so that I don't take big losses. And my biggest loss so far has been $330 in one day. It's not much, but I'm not used to losing much. You know, to be honest with you, I'm pretty consistent with my wins. You know, I didn't take the trade. Now I should have taken the trade because, you know, it would have been great risk management. And I had 2,000 shares. I was ready to press the trigger, you know, press the short button, the sell button, and I just chickened out. And had I done it, 2,000 shares, let's say I would have got it executed, let's say at 1335, you know, I definitely would have rolled this down to that low and probably covered somewhere in here. So, you know, I would have made, you know, about what, let's say what, 30 cents, 27, 17, about 20 something cents, you know. So I would have made about $400 or $500, you know, which would have been a great short. But you know, I chickened out. And then you see, look, and this is why patterns matter so much. Look what happens. It forms sort of this double bottom, and then you got the bounce, you know, and then you got the bounce. So you know, it's you know, and you could have just rode this back up. Now what I wound up doing was, you know, once I realized that my thesis worked, you know, I was like, okay, you know, I know what I'm doing. Let me chill. So what I wound up doing was I saw Hertz running, and I saw Hertz running, and I saw Hertz sort of like right in here when it was like gapping up, and I saw it gap up. I saw it break 11. And once it's actually, no, I caught it over here, to be honest with you. Yeah, this is where I caught it. So I saw it form this higher day, and I saw this form this like double top here. So then I decided to take a short, and I took a short entry right in this candle at 1091. I bought, I think it was 2,000 shares. I shorted, and I watched this thing go down. Let me scroll out. And I saw this thing go down to the 20E. No. I'm sorry, guys. It was over here. It was over here where I shorted it. I think it was over. Yeah, because it was the VWAP bounce. Yes. I actually caught it here at the level 7 mark, and right in here is where I shorted it. Once it was breaking below 11, I actually took a short on it. And I watched it go to VWAP, and then when it started bouncing, I just covered, and I made like $60 on it because I caught it like I got executed like around 1096, and then it hit 1088 and it started bouncing, and you know, it actually came back down to VWAP, and actually no, I actually watched it go back down, and I held, thinking that it was going to break. I was hoping for that break below VWAP to get a nice wash, and that would have been beautiful if it had done that, because I would have made some nice money. But then it started gaining momentum, and I covered. So after commissions, I made like $60. You know, and that was it. I stopped trading. Now I could have continued trading, but I didn't, because I said, you know what, I had a little win, and I'm good with that. You know, tomorrow's another day. Just goes to tell you guys that you know, that we all face these obstacles and challenges when we trade. You know, you're gonna have win streaks and you're gonna have losing streaks, you know, but you gotta trust the process, you gotta trust your strategy, and know that you're gonna be okay. The other day I introduced this indicator. Let me move this off here too. Let's do let me just take this off so you can see it clear. Apply. Okay, good. Now I introduced this new scanner where the exponential crosses VWAP. And if you notice, a lot of people seem to like it. Let me look at the big play today, which was let me see, which was no, MBRX. If you notice MBRX, now it's not guaranteed that this is always going to work, but if you notice here, it's doing the sideways consolidation. You get the pop, and if you notice right in here, the 13 EMA crosses over VWAP, and you got that push up. And it's a great indicator. I've been getting a lot of really good feedback about this indicator, and this was the play of the day. Now, this is a low float, 20 million or shares or less. It constitutes a low float stock. I don't know what it's gonna do tomorrow. Maybe it continues, but this is a good sign. I mean, last summer we had low float madness where these stocks that were breaking high day at the market open were just running crazy, and that's a great opportunity if it comes back. Last year, tons of money was made. I made a lot of money longing, these high day breakouts. And what happens is people, what they do is they do use this what's this called a gap and go strategy. So they look for the stock at the high of pre-market. So if the high of pre-market was 207, once it breaks above that 207 mark, let me zoom out. Once it breaks that 207 mark, they go in, risking the high of pre-market. That's called the gap and go strategy, where they take a trade above the pre-market high, risking the pre-market high. So if we're back to the low float madness, that's a great strategy to say, see what happens pre-market, figure out what's your high and your low pre-market. So this was the low pre-market, this is the high pre-market, and what you want to see is you want to see the stock break above the pre-market high, risking that as your stop. So you got to have your tight stop, or make sure you just have your your finger on the sell trigger, if it breaks below it, and maybe you want to give yourself a couple of cents of slippage, maybe like 3 or 4 cents below it, or maybe 5 cents below it, just because a stock sometimes it'll come down in price and then run. Like if you notice here, it gaps up above it, right? If you notice, right, the market opens, and right in here in this tail, wick tail goes up, and it comes below it, and it breaks down below, it hits the previous day's close price, and then it finds its consolidation, and then soon enough it rips. But the gap and go strategy, and actually this is probably not the best example, but the gap and go strategy, it really is used at the market open. So so the stock rips at the market open. This thing actually didn't start ripping till after 13 p.m. But the gap and go strategy is that strategy. You can watch Warrior Trading videos. He talks about gap and go strategy a lot. Let's see. Well, this is my watch list for tomorrow. I already posted it. Tomorrow I don't. These are stocks that I expect to be volatile. I'm hoping Hertz will pull back. My hope is BIOS. Oh, actually, this is the wrong one. Sorry. This is my watch list for tomorrow, and I already posted it. But my hope is that BIOS, because it's so crazy. If I look at the yearly, look at this, and this is why it's good to know on a yearly time frame. Look at this. Look at this gap fill. This is called a gap fill strategy. So this is where it completely collapsed, and this was right here. This was the high mid-year. Once it broke that, look at this. It's on the yearly. It's running above, and it's just riding the 13 EMA. Now it's out extended in front of it. It's had 1, 2, 3, 4, 5, 6 green days. Look at the RSI. Now the RSI was originally hot back here in June 1st, but that didn't matter because it just been running. But now the RSI is at 94. You gotta expect some sort of pullback. So tomorrow I'll be looking to short this if I can, But I'm gonna be looking to see what low floats are potentially can run. I do got this low float scan. Let me show you the criteria, just so you can hook it up. So this is the criteria. Look for stocks between 20 cents and $30 with 300,000 shares, up 3%. With 100,000, between 100,000 and 20 million shares. So this is the low float. This is considered low float. So anything with 20 million shares or less would be considered low float. So that's the max in terms of shares available. And I want to see the price direction has increased over the last 2 consecutive bars on the daily. That way, it pops up on my low float. Actually, this shouldn't be the daily. It should be on the 1 minute. I need to definitely fix that. But you know, you see like NEOT popped up on my scanner, so I put up NEOT, and here we go. This is a low float runner, and this is a perfect example of a gap and go. So this is the pre-market high, 57 cents, right? So you make sure you figure out what's the pre-market high, what's the pre-market low. If it breaks below the pre-market low, you short it. If it breaks above the pre-market high, you long it. You know, and that's sort of a gap and go. So once it breaks above the 57-cent price, that's where you enter the trade, risking that, and that's considered the gap and go. All right, that's what a Ross from Warrior Trading does. It looks at the high, looks at the low pre-market. If it breaks above it, he takes a momentum play, and it has some volume and it's pushing. He takes a stab at it. If it breaks below it, he doesn't short, but you know, that's a good opportunity to short. All right, and you can kind of find your range, and that's how you know what your range is. You know, that's how you know what your range is. All right, so that's really what I wanted to talk about. I wanted to keep this short. Hope this makes sense. I know I didn't really have a thesis for today. I just wanted to talk about some things. All right, so you know, share, like, follow, and I appreciate it.